Senator Warren.
So thank you, Mr. Chairman. Thank you for holding this hearing, for your leadership in this area. I think your focus on this set of issues has already benefited consumers and helped some small businesses. I think you're starting to move things. And I want to echo your comments about the Fed's decision yesterday. Certainly a step forward, but a meager one. I think we already have ample evidence that the Fed needs to place additional restrictions on how banks trade and warehouse physical commodities to reduce systemic risk and to protect consumers from market manipulation. And I hope once the public comment period ends that the Fed will act quickly to put those restrictions in place. You know, the Fed history here is very troubling. We still haven't recovered from the failures of the Fed and the other banking agencies to limit systemic risk and protect consumers leading up to the 2008 financial crisis. And as important as it is for the Fed to put time and resources into monetary policy making, we have learned the hard way that there is also a need for the Fed to pay a lot more attention on the front end through their regulatory functions and to better protect us all. So let me just start with a quick question for Mr. Gibson. If we reinstituted the protections of the Glass-Steagall Act, as the bill I introduced with Senators McCain, Cantwell, and King would do, would the Fed still be in the position where it had to decide whether trading in zinc is okay but trading in aluminum is not, or how much insurance an oil tanker should carry? Mr. Gibson?
So I don't know the detailed provisions of your bill, but there certainly would, if the authorizations that financial holding companies have to do these commodities activities were removed, then no, we would not have to worry about that.
So the Fed would not be in that business?
Right, because it would not be a permitted activity, period.
That's right. Well, I have to say that sounds pretty appealing to me. I want to turn to the enforcement side of this issue as well. Senator Markey and I sent a letter to FERC in July with some questions about the settlement with J.P. Morgan over claims of energy market manipulation. And I appreciated the very prompt and very thorough response that I received back from FERC chairman. And I have a few follow-up questions about FERC and the FCTC's, I'm saying it backwards, CFTC's coordination in this area. So in its response to my letter, FERC said that it needed access to the CFTC's large trader report so that it could effectively look for possible manipulation in the energy markets. And the large trader report identifies individuals and institutions that have made large transactions in the futures market. Mr. Bay, could we start by having you explain briefly why access to the large trader report is so important to FERC's efforts to monitor the energy market and energy market manipulation?
Thank you, Senator Warren. So FERC receives data on the physical gas and power markets, and the Commission has issued a number of rulemakings over the years to get even more data. That data has been very helpful for us in terms of beefing up our market surveillance. But the regulatory construct behind FERC and the CFTC was fashioned years ago when there was basically a physical market for energy, and then there was a very, very small financial market. For example, the first oil derivative was not issued by NYMEX until 1978. The first natural gas futures contract was not issued on NYMEX until 1990. The first electricity derivatives was not issued on NYMEX until sometime after that. But what has happened is that whereas at one time the physical market was much bigger than the financial market, that is the derivatives market, the converse has now occurred. And with respect to cross-product manipulation, you can think of them as having three components. There is a tool, there is a target, and there's a benefiting position. Typically, the tool is some sort of trading activity that affects the value of a physical commodity product, right? So you do something, you trade maybe in a way that's even uneconomic with respect to that physical transaction, but you're doing that because you're trying to move prices. But then, to complete the manipulation, you need to have a benefiting position. And that benefiting position invariably in the investigations that we've done involving cross-product manipulation has involved a financial product. And so if we had access to more financial data, it would allow us to create both more sophisticated but also more sensitive and efficient algorithms, screens that we would run against the data that we receive. I'm pleased to say, however, that FERC and the CFTC entered into an MOU in which the CFTC agreed to provide data to us for surveillance purposes, and we look forward to having discussions with the CFTC to get that data.
Well, so that was actually my question in this, because I wanted to follow up about the coordination between the two agencies. You know, it's not just that you decided to do it. Dodd-Frank required that the CFTC and FERC agree on principles for sharing data so the two agencies together could more effectively monitor market manipulation than either one of you would be able to do alone. It took 3.5 years for you to work this out, but I understand that it was 2 weeks ago that you just entered into an agreement for how to share data. But as I understand it, the CFTC at that point did not commit to share the large trader report with FERC. So I'm concerned about this and just want to make sure that I understand this. Mr. McGonagle, I'm concerned if the CFTC is unwilling to share this piece of information. Is it right that you have not yet agreed to that? And if so, can you explain why?
And thank you, Senator. With respect to surveillance, access to information, we have invited FERC staff to come to CFTC premises while we work out a protocol that ensures that the information that we receive within our records and rules as mandated by Congress for confidentiality concerns, that information can be transferred and shared in a way that satisfies our obligations. And so in the interim, we have offered to work with FERC staff so that they can have access to the information. I should also point out that certainly since 2005 and before, as part of the 2005 Memorandum of Understanding that we had with the FERC, and just as an overall matter, our cooperative enforcement relationships with all other federal regulators, when it comes to information sharing, particularly with respect to enforcement investigations, we have worked very diligently with FERC, received information from FERC as well as we do with other agencies. And so this is one additional aspect, surveillance, layered onto what I view as an already strong cooperative enforcement relationship.
So let me just make sure that I understand this, Mr. McGonagle. I don't want to miss this. So you are making the large trader report available to FERC people in any investigation. They have to come to your place to do it, but it is available. Is that right?
That's right. And then we
fully available.
Fully available.
Okay, and that's your understanding too, Mr. Bay, that it's now fully available?
We sent staff to the CFTC last week, and they were able to access the large trade report. That was a step forward. What we are hoping to receive at some point, and this is a detail to be worked out under the MOU, we believe that the MOU supports this. What we're hoping to receive is an ongoing live data stream of the relevant financial data for the gas and power markets from the large trade report.
Okay, and Mr. McGonagle, I understand from you that the only reason this hasn't been done is that you have concerns about working out the details about confidentiality. That's what I thought I heard in your answer, that there's more that FERC needs to do in order to reassure you about the confidentiality of the data they're receiving. Is that right?
That is effectively correct. The FERC has guaranteed that they would maintain the confidentiality provisions that we're also obligated to under Section 8. There are questions just sort of around data transfer issues and the technical personnel need to work those things out, and that process is ongoing.
I'm sorry, so you're saying that the confidentiality issues have been worked out, but you still got some technical data issues. Forgive me for pushing on this, but I think it's a really important point. Market manipulators don't respect jurisdictional boundaries between agencies. In fact, they try to exploit those boundaries and take advantage of gaps in oversight and in data sharing. And that's why it's absolutely critical that the Commodity Futures Trading Commission be willing to share these data on an ongoing, timely basis with FERC. And so the reason I ask about this is I want to hear that we are going to protect consumers, we're going to protect the public by making sure that these data are shared. I'll follow up on this, but I sincerely hope I won't need to, because all of this is resolved and that those data are going smoothly and quickly over to FERC as well. Thank you. Thank you, Mr. Chairman.